Hey guys, this is Horse Race Investing, and this is kind of a part two on the last video on I was talking about selling puts. Now I'm going to talk about here today. I'm going to talk about mostly about buying calls. So instead of looking at, I have like a personal example that I'm investing in that I'll show right now instead of like a hypothetical. So right now, this portfolio is mostly like what I'm doing is so basically I talked about if you have an edge, it's better to like be in the casino and try to get the outsized returns, right? And if you have like stocks that you want kind of like cash flow from, it's better to sell puts. So here today we're going to about buying calls if you have an edge, right? So here, I'll be talking about how we can use the options market to make outsized returns. So mostly here, I'll show examples of. I have a previous video, like 2 or 3 videos ago, about like my theses and why I like these stocks in general. So I'll just go real quick. So the two stocks I have are Humana and Ulta Beauty. So I'll just pull both of these up. So Humana, basically, really quick thing. Basically, I believe that the healthcare insurance industry is the government healthcare industry is still fine long term, and the price will come back to all time highs and even exceed in the long term, right? So that's why I'll be buying leaps, like around at least 2 year out contracts, right? To take advantage. And Ulta Beauty, I believe that even with this 30% dip, I believe that Ulta will still be good long term, and they have a nice moat with a lot of subscribers to their service of makeup and the beauty products and stuff like that. And even if a new product comes in, they'll just add it to their shelves, so they're pretty much pretty good. So that's what I think long term, and I think these have an edge over the general market right now with all the stocks have been just crazy rallied up and stuff like that. So right now, so we can look at this is the main call that I would say I have right now. So let's say from the options pricing. So basically, well, I'll just go into the options chain. That's probably the best thing. So shoot, oops. Acting a little bit weird. Okay. So these were the calls. So I went down to I would say if you want to buy a call on a stock you like, I would say go to the farthest option chain as possible. I would say the farthest option is probably the best option in dates. So basically this is going to be around 2 years. So this is January 2026. So this is the call I have. So the big thing I would say you have to look out for, so you can like have a really good stock pick, but the problem with most of the call options long term is buying these calls or is the implied volatility is very high. Let's say there was a pick that I liked. I would say like under 35 to 40% is good, right? So there's a stock I was looking at before to sell calls on, because selling calls you can take advantage of a high implied volatility. Buying calls, you're paying for the implied volatility, so it's just not that good. So you look here. So Children's Place. So right now you're gonna pay like around 85% implied volatility, and you're paying around $6 a premium for only a $10 stock. So overall, that's like pretty expensive, and then it'll just like decrease the amount of returns you can get. So like the thing with like an implied volatility like this is, so even if I like double my money on this stock, I will still make less money than if I bought Humana call options I was talking about before, and I actually just made 50% or even 40%. So overall, I feel like buying these lower implied volatility stocks when they're on a dip like Humana, which is pretty rare to find it on a 40% dip like it is right now. So you kind of have to wait for these opportunities and take them at the perfect times to get the best returns. So, and also Ulta, I'll show Ulta's implied volatility is around the top end, around 35%. So overall, like The thing with the options pricing is you can maybe sometimes snipe the calls at good prices too. So like since these are very like smallly traded, we'll see like today it was mostly up 15 to 10%, but sometimes you can get like a good price at around like $200 under and stuff like that. So, and these move very fast. So you can see like I'm starting to buy like right around here, and like this small of move on the chart is like a double. So it's like pretty like they move very fast. So you don't want to get in around like here and then just like have this like really bad position. So you want to be buying when the stock has dipped a lot. So I would say you would want to find like a high quality company that is pretty big with a low implied volatility, which is down maybe over 20 to 30%. I would say even 40%, like the 40% range is where you start to look and it's like attractive. Like most of I'll tell you the best opportunity times, which is like Meta and stuff like that, and Netflix. At these times, if you buy any of these call options, even around here, you'll print like crazy. So it's like, that's probably like the times. I would say right now, the best options are Humana and Alta, in my opinion. But you can find your own stocks you like, and you can link them down below, and I'll check them out and I'll do analysis on them, which would be great. And then I could have more options. People are also recently looking at CVS, but I think Humana is just a better play overall, and the applied volatility is lower, and so I'll be paying less for the contracts. And so that's mostly it. What I want to talk about, like this is more being on the gambling side, because like there's a lot of upside here. Like I'll show like for the risk. So let's say like here, let's say Humana is at 335. Let's say my valuation, I think this can go up to around $450, right? That range, even 500. So let's put 450, right? Let's say it was to move right around 450 by the end of this year. It would be right around $4,500 per option. And we'd be buying them right now for around 1,300, so which would be like over around a 3x, which is kind of crazy. So or more than a 3x, so which is kind of crazy gains. But then if let's say like it just stays at 335, you'll lose like all your money pretty fast. So, or 350 in these ranges. So but I would say like the big thing is, if you really just don't want to lose all your money, I'm willing to lose most of the money I'm putting here. So that's why I have these out of the money calls. If you just want to be more safe, you can just buy in the money calls or at the money calls around 335. It's pretty risky to buy these 470 calls. So I would say, yeah. So we'll see how this portfolio goes out, and if it outperforms the market. And this is more of a portfolio analysis too, or my test portfolio. And I guess this was more of an update too on the portfolio and how it's doing. But mostly I have to wait for these Humana and Ulta stocks to move to really see the gains come in, because I've just recently bought them. So I hope this video helped you guys like understand the power of call options. In my last video of selling puts to create income and more like cost basis, and or create your cost basis down, because you can use this more as to maybe grow your wealth, and that the selling, this strategy of buying calls to like grow your wealth, and then maybe like selling puts to maybe just like run it like an insurance company and just collect the premiums and make pretty good returns. So in there you can make, there's like a strategy I showed 20% a month without a crazy amount of risk. This is more like if you're going for crazy gains, I would say put a smaller percentage of your overall portfolio into this and try to do that way. So that's my main two strategies that I'm going for right now. And I'll make videos updating how this portfolio and that strategy is also going. So thank you guys for listening, and I appreciate your time. Yeah, thank you.